Hi everyone. I have Instagram and Facebook, or Instagram or Facebook. Good morning. It's our first episode of Real Estate Chats with me, Jennifer Ho. And today I did have, when I first thought about the doing this, I asked you guys to send me a DM me or put in the comment page or on what you want us to talk about. And I got a lot of direct messaging. Everyone is still thinking, is it still time to buy? Should we rent? Should we continue renting? For first-time home buyers, they're asking, I want to buy in 2 years. What are the things I should do now? So that said, I thought, what best thing to do for me is actually invite a mortgage lender. And I have here one of my really good friends, Sean Malloy, from
Cross Country
Mortgage. See, he just moved to a new company, so I have followed him. You and I first met.
Yeah.
When I was still with Coldwell Banker.
Yeah.
You're with PHH.
Right.
And then you left us and went to somewhere else, which doesn't matter.
That's what happens in our business.
So right now you're with Country Mortgage.
Cross
Country. See, I can't even remember. Shame.
Yeah. We're actually the fastest growing independently owned mortgage company in the country. And we're in all 50 states.
That's a good thing. And later we're gonna go do more. Full disclosure: we're both vaccinated, boosted,
Yes.
and everything, so we're good. We do have masks and everything like that, but for the show, we're not gonna put the mask on for now. So before we start with the questions. Hi guys, thank you for joining. I could see people joining us right now. I actually, before he came in, I did ask him a question. People are asking right now, there's rumor going on that the interest rates are gonna go up very quickly and it's gonna affect the property market, the property prices. So I thought, I can't answer that. It's a mortgage question, so.
Well, there's two thoughts about that. Because real estate and interest rates are such an engine of our economy, you can't overreact and tighten too quickly because that will, again, cause lots of problems. Interest rates are remarkably low. They're probably just as low as they were 4 or 5 months ago. So a perfect example is I was able to do 30-year fixed on a jumbo product for $1 million at 2.75 30-year fixed.
No way.
Yeah, we have one of our lenders is really aggressively pricing right now. You can't be self-employed, but if you're not self-employed, I can put you there.
2.75 30-year fixed.
30-year fixed.
Wow. I haven't heard of that rate for a long time.
Yeah, it was a 70% loan to value, but again, the rate is incredibly better. And it's much better than conforming right now. So you can actually get jumbo money oftentimes cheaper than conforming money. So the conforming limit going forward for 2022 is going to be $647,200 here in Fairfield County or in Connecticut. With what we are in Fairfield County is what we call agency jumbo area. So actually we can get Fannie and Freddie money up to $695.
Wow. How much was it before?
Last year, last year conforming was 547.
I was not bad. I said 560.
but the agency jumbo money was 620,000. So it's gone up. So you can get a lot of people. So as an example in that, we can get people with as little as 3% down in those mortgages.
No, seriously.
Yeah.
But for you, people would think, anyone can buy a 3% down, but not necessarily though. There are certain requirements.
Yeah, there are
that
limits.
You can meet.
Yeah, it's a process where you have to take education and first-time home buyer kind of stuff.
That's a first tip for you guys. First-time home buyer, before you start looking at houses, putting in offers, first step, always talk to a mortgage lender. Don't limit to just one. Talk to as many lenders as much as possible.
Not too many.
Oh yeah, don't do 20, but maybe 3 tops. But one thing though, there's a lot of people ask me is that, well, I don't want to do that because it's going to affect my credit score. That only happens if they do.
Well, if they're serial appliers. So
Yeah, you don't apply. You can ask information,
Yeah,
but you don't apply.
well, what you can
There's
do
a
is
difference,
you
right?
really to really be pre-qualified. A mortgage person is going to have to pull your credit.
Okay.
So now the interesting thing about how it affects your credit is, let's say over a period of 4 or 5 months, you go to 5 or 6 different people and they pull your credit and you go through the process and you don't act. That can affect your credit.
I see.
However, in a mortgage scenario, within a 30-day period of time from the first pull,
Yeah.
it doesn't affect you at all.
Okay.
Within 30 days. And I think what you basically want to do when you're dealing with a mortgage person is try to understand how they process their loans, what their team is, what it consists of, what kind of lenders do they have, are there a lot of choices involved. That's very important. And a lot of it's chemistry too.
That is
You know.
that is very true.
Yeah.
Be wary on a lender that won't call you back.
Oh yeah.
That's very, very important. And if you are already in the process of buying a house and you have a mortgage contingency and you're talking, you have a lender, my suggestion, my recommendation, and it's we'll see if Sean would agree, is have your lender be able to talk to your your real estate agent, because
Sure.
for me, what I like doing is, like, if I represent a buyer, I want to be able to follow up on how the mortgage is doing.
Oh sure.
Because sometimes a lender...
Everybody always needs to be in the loop.
Yes, your attorney. Exactly. Attorney,
actually-
lender.
Yeah, and both sides of the transaction, so
Yes.
everybody's comfortable. So there's
Yes.
not any pressure on the seller, not any pressure on the buyer. They feel comfortable. They know what they need to do to fulfill their obligation and get properly
Yeah.
approved.
Because that's one of the things that our job as a real estate agent is, my job, for example, is to make sure that whatever you're doing, buying or selling, my job is to help you
Right.
with that process. Something like that should not be stressful.
Right.
So that's why you have us. Now,
No, I would like to say one important thing. Any good mortgage person is not going to share any personal information
Yes.
with the attorney or the agent or anyone else. It's strictly confidential.
thank you for bringing that up, because some clients would say, like, I don't want my
Yeah,
lender giving you all information.
Yeah.
Don't worry. The only questions we ask as your agent is just to follow up. Okay, how's the mortgage going? Are there any documents you need?
Right.
What's
the timing?
Commitment. What's the timing? The commitment. We only have till next week. How are we in the process?
Yeah.
And so thank you for that. But for the main question that we had, that I got the end so much, is to rent or to buy. A lot of us right now are renting. Some of the people, I had 2 people actually told me, my boyfriend and I are living with my parents. We want to buy a house. We're going to get married in 2 years, but we want to buy a house. What should we do? Do we, and then other people, like, it's like, okay, I've been renting for 5 years. We feel like it's time to buy a house. When do you know to rent or to buy? That's the biggest question right now that I have.
Well, usually that's a horizon. How long are you going to be in a particular place? So if you're in an area where you know you're going to be leaving in a year or a year and a half, then it's probably better to rent. If you're going to be in an area that you're likely to be for 3 to 7 years, you're probably better off buying. I have a chart, and for any realtor out there, I can co-brand this. But I'll give you an example. If your rent is $4,200 a month,
Yeah.
is that a fair amount?
Yeah.
Okay. In 5 years, you've spent $252,000.
Wow.
If it's $4,500 a month, in 10 years, you've spent $540,000.
That's a house already.
It's certainly a substantial part of a house.
Yeah.
And when you think in terms of renewal in your timeline, how long you're going to be there, every time it comes up, if the market's hot, your payment could go up. You get
Yes.
a 30-year fixed, it's 30-year fixed. It's period paragraph. You know what your payment's going to be. The only thing variable in that scenario is your insurance and your taxes.
Yeah.
But your P&I, your principal and interest payment, are static. And what you're doing is you're building wealth for yourself, not for someone else.
Well, I actually I showed a commercial property one time, and I was talking to the tenant. The tenant showed us the building, and he said, "Yeah, I'm actually making my landlord rich."
Oh, totally.
That's what he's saying. And the thing is, like, look, the fact of the matter is, not everyone can buy real estate right now. It's either they don't have the down payment yet, or
There are credit issues.
they have credit
But
issues.
there's also volume issues. I mean, there's not a
Right
lot
now, there's
in the
nothing.
market. Yeah,
There's
not a
nothing
lot
in the market.
So you're kind of circling around to be prepared for when an opportunity comes up to strike. And
Yes.
to do that, you really need to be pre-approved.
Yes, that's
You
so
need,
true.
you need to be able to, with confidence, say, I can do this in 3 notes. Here's my money. This is what I'm putting down. I've already picked an attorney. I picked a real estate person. I picked a mortgage person. I've got a team together to make those kind of choices. Because as everybody knows, there are multiple offers on just about every home that's being sold in our area.
And not only that, because there's so many buyers out there and there's not enough inventory,
Right.
what's been happening is that buyers have been putting offers on like 3-4 different homes
Right.
and then hold it and then decide, okay, I think I'll pick this one, and then everything goes back in the market. But at the same time, I have talked to 2 different agents where everything was cleared, pending or nothing. The commitment letter was sent out, and they did not close for whatever reason. They
Yeah,
did
that's
not get a
strange.
mortgage.
That hasn't happened to me in the last 2 years, but
I heard 2 in the last 2
yeah,
weeks.
then it's I don't know what's bringing that up.
Well, one thing I could remember is that there was a situation a couple of years ago. They were about to close, and it's something that they need work on. They open a credit card.
Oh, yeah,
And
yeah.
home. So if you're in the process of buying a house and it's about to close,
Yeah.
don't open a credit card.
Yeah,
don't buy a car.
I always say don't accept, don't seek, don't pay down any credit while you're in the process.
Yeah.
I mean, I had somebody on a first-time home buyer who was so excited about getting approved for a home. It was in Norwalk. It was less than $500,000, but they were very excited, first-time home buyer. And as we got closer into to closing the loan, they went out and bought a car. And it increased their payment, and it wasn't just a basic car. The payment was over $600 a month,
Oh wow.
which threw them out. So they had to get a gift from the parents, and it made things complicated.
It doesn't mean that it's not going to happen. It just delays the process.
But always remember, your clients, every lender is going to check the credit of your client
And employment.
10 days before they close. So if there are other credit inquiries, they're going to have to respond to that, and they're going to have to prove that they've taken out any debt. So that could become an issue. But you should be very static if you're in the process of purchasing a home.
Now, do you guys have any questions? I'm not.
I can't
Okay.
see that.
So far no questions.
Okay.
Okay. Now, there's a couple of banks, but not many. Physicians loan.
Yeah, we have a really good lender on a physician's loan. I've got a flyer, and again, I can co-brand this sort of thing.
I will be posting this after after the live videos.
But the real key on the doctor's loans is we don't utilize the debt that they've incurred to become a doctor. They'd have to put 5% down, minimum FICO score is 700, and it's available in all 50 states.
Okay.
Yeah, so it's very easy to do.
Now the thing is like, so they only give 5% like down.
They only
Basically.
have to put 5%.
They only have 5. Okay.
Yeah, up to $1 million.
Yeah, because how many? I think to become a doctor right now, they're in debt for
It
like
can-
$250,000 or something like
It
that.
depends how fortunate they are. But yeah, it's a very expensive process. So as people come out, they're very, they've been trained very extensively. And they have good jobs and they have good pay, but they've got this debt hanging over their heads.
So I do have a question for you regarding physician's loan,
Mhm.
because I was during the summertime had a client. They're a doctor. We got into a multiple bid.
Of course.
We ended up losing because we had to have a mortgage.
Right.
So in this day and age where cash is king, sadly, how would they, whether physician's loan, normal loan, VA loan, or whatever loan it is, how could they make their offer more better.
Well, traditionally,
Basically better.
I always joke, to the seller, it's always all cash.
Yes.
So the process historically was people would come in and make a cash offer. So the concept is they're well qualified. They can write a check for it. It doesn't hold up any kind of contingencies. Don't need to be inserted in the process. But with that process, they were expecting a discount on
Yes.
the price.
Yes, they
but
are.
now things are different.
Yes.
There aren't really any discounts along those lines. So if you're competing against a cash purchase, you might want to up the money.
Up the price.
People don't understand. I'll be happy. Feel free to give me a call personally. But the difference between $30,000 and $50,000 in a mortgage on a monthly basis is trivial. It's not a lot
Now,
of
how
money.
much is something like that would be?
Probably around 140.
$140 a month.
Yeah, it's not a dramatic differential. So
So if you're getting a mortgage, if you're thinking of putting up $50,000 more, that's like maybe 200 bucks a month.
Another way to look at it, and over the years I've talked to so many people who say I'm willing to pay this amount and I'm not going to go a dime over.
Yeah.
Well,
That
5,000,
$50,000.
10,000 over
Yeah.
can be whether you get a deal or not, and $5,000 or $10,000 is lunch on a monthly basis.
A cup of coffee.
Yeah,
really.
so what you want to do is you want to be dealing with somebody who'll respond immediately,
Yeah.
actually do the calculation for you so that you can mentally figure out what you want to purchase. And if you're making an offer, you want to have a strong pre-approval. You want to have a strong
Yes.
team. You want to have a strong reputation, so that when your pre-approval is submitted to the other side, it has some teeth to it, so that they can trust the mortgage person involved.
So does it make sense? Okay, there are difference between a pre-approval and a commitment letter. You can call any banks and they can write you, yes, so-and-so is pre-approved to purchase a $600,000 home, but that doesn't mean anything.
Well,
and there's they call it differently. Each bank calls it differently.
Well, a good mortgage person is if they're going to put out a pre-approval letter, that means the person has actually applied. They're in the system.
Yeah.
The docs have been reviewed. You verified their income. You verified their assets. You pulled their credit. You can see exactly if this person's approved. No mortgage person wants to give a pre-approval to anybody that's
You'll
not.
be surprised.
And I would never do it.
It's easier for us as agents because, we have mortgage letters that has 3 different pricing depending on, where they are at in
I would
the
always
negotiation.
What I always say to a client is, listen, once you're in my system and you're going through this process, and it may take you a month or 3 months or 4 months, the first thing is arbitrary number. Let's say a home is listed for $900,000 and you want to make an offer for $875,000. You don't want me to give you a pre-approval for
$900,000. Or no, not only that, if you're getting a pre-approval,
you want it to be specifically for the amount that's
the amount you're offering. Because I've had I've had clients sending me a pre-approval, let's say for $1 million, and our offer was $875,000 or $900,000.
You're virtually saying to the seller,
I can afford $1 million. Don't bother negotiating.
Right. So, and that could be done, 7 days a week, very easy. I can upgrade a pre-approval.
He works on weekends, guys. Just want to let you know.
Everybody does.
No,
But-
not really.
Yeah, that's fun.
I've had mortgage lenders. You can't even find them
No.
by the weekend.
Yeah,
So it's like, wait, I
those
think
days are over.
that's true.
But yeah, and you can change those pre-approvals and put those
Yeah.
out within a 5-minute period of time. And they're very specific to the amount that you're making an offer for.
The worry they have with that one though is putting it in the system. They feel like then if that's the case, I'm stuck. I can't,
Well,
I
what you
can't
want to do
work
is,
with-
you alluded to it before, maybe you want to talk to a number of different lenders.
But does that mean you apply with 3 different lenders though?
No, it basically means you interview them. You interview
Okay. Yes.
how do you structure your deal? And the nice thing about the way we do it across country is we work in pods and teams. So in my group, there are 4 mortgage generators. We have a dedicated assistant and a dedicated processor. So it's a whole team.
The processor, the back room is the one that, well, I heard they're the one that gets blamed all the time if something is
Well,
late.
I'll tell you, I have a terrific a terrific assistant.
Underwriters. Those
Well, you can't pick the underwriters. We can't interfere with them. But if the team understands it and they understand what different programs are and personalities of different lenders, and different lenders have different personalities. Some are very strict, some are very easy, some are good with doctors, some are good here, some are really good conforming lenders, some are very good jumbo lenders.
Yeah.
So you've got to be experienced enough to understand who you're lending to. It's not always the best price either. So when a client goes, years ago I had this client who I did a number of mortgages with, and we were about to make an offer on a house, and he heard that there was a certain interest rate down there, about 1/4 to 3/8 of a point better than what I could offer him. And he said, well, does this rate exist? And I said, it does exist, but it doesn't exist for you.
Oh,
So depending on the parameters of how they lend, you've
Yeah.
got to fit into those niche plays.
now, okay, let's say I'm a buyer
Mhm.
and I spoke with 3 different mortgage lenders. So one of the things that you need to consider in interviewing lenders, rate isn't everything. Because someone will offer you a lower rate but can't deliver the mortgage. So a couple of things you need to know when you are interviewing. Yes, the rate is important,
Mhm.
but you need to know the turnaround, what Sean was telling you.
Yeah.
Because like in a seller's market like this, sometimes the quicker you close, the better, or how long are you gonna hold the mortgage contingency?
Yeah.
And some would say, look, they're so overwhelmed that they'll say 45 days. As far as a seller's concerned,
Yeah.
45 days is too long.
If timing is an issue, all lenders post how they underwrite.
Yeah,
So if you bring something in on a Monday at the first of the month, they're virtually saying, well, we're not going to get to it till the 12th of the month.
mm-hmm.
Well, now you know you have that window, and then they
Yeah.
have a number of days within that window to deal it. But you don't submit a loan to a lender unless it's totally done. T's are crossed, I's are dotted. All the information is there. The worst thing you can do is do a piecemeal submission.
Oh my God, I remember that
Yeah.
time when we had that. They send you one document at a time.
One document, every couple hours. And you can't really go to an underwriter like that. So what you want to do is, again, lenders have personalities. You as a client you want to feel comfortable with who you're working with.
Yes.
And you can figure that out in
You
a
know,
conversation.
a conversation or two, you pretty much would know whether you'll be able to work with this
And
person or not.
and if you get a recommendation from the attorney or from the real estate agent, they can feel comfortable about how it's going.
They'll tell you. Just to give
And
you
how
an
you
idea.
respond to their questions. Yeah.
So as I said before, I have known Sean for a very long time, and I remember last year, the height of COVID, we had 3 different transactions that were very interesting.
Yeah.
One of them was the seller decided, I'm not selling. We have no contingency, contingency or anything.
They chase them.
So, and then he just decided, I don't want to sell.
Yeah.
So that process, we didn't know whether we were going to close or not. And
That's
then they said, okay, we're going to close in a week.
That was really rare.
And then he got it done.
Yeah. Yeah.
So
Well, a lot of that has to do with the
because
team.
they were very efficient. When you needed documents, they
Yeah.
send you everything.
Yeah.
And that really is the key.
Yeah.
You want to you want things done quick.
You want to set expectations
Yes,
immediately. This is what you've got to do for me to do this. Okay, we've got to have this thing done in 30 days. Well, do it in 30 days. I'm going to need all your documents over this weekend so I can put the whole deal together. We can get the appraisal going. Biggest challenge in a quick close right now are appraisals.
Pay stubs. And
No,
appraisals,
appraisal.
yes, 2
Because
weeks. It's still the
2
same.
weeks, 3 weeks, it depends on the appraiser. And a lot of appraisers have resigned or stopped being appraisers during COVID.
Oh, because they were doing 5 a day sometimes.
So yeah,
And
so
they-
an example would be
yes.
sometimes we have to bribe our appraisers to get out there. So let's say they would
Can
normally
you tell them that?
well, it's not a real bribe,
It's-
but they'll say okay, our fee is $600 to
Yeah.
do this appraisal, but if you give me $750, I'll do it in a week.
And not only that, having the appraiser come out and actually getting the report,
Yeah.
it's that you need to add that in to the number.
Because we don't have, no mortgage person has any authority over appraisals.
Do you remember we had one where the deal, this was last year, the original deal died because the buyer basically lost his job and the seller,
Right.
and then within a month
Right.
they accepted my client's offer,
Right.
and the appraiser said no need to do an appraisal because we just did one like 2 weeks ago.
Yeah. Yeah.
And then they changed their mind last minute, and that last minute was during we had a storm, that mini
Right.
tornado that hit, but we still got that
Yeah.
done.
No, it's. But
It's stressing the phone, but we get things done.
You can't really.
You can't predict.
And I can't even really communicate with an appraisal. Like years ago, we could talk. And we could
Yeah, I
set
can't.
things.
We can't.
But
either.
you must understand, as opposed to a refinance, on a purchase transaction, the appraiser has to see the contract or can't
Yes.
submit it.
Yes.
So they know what the price is.
Yes.
So that helps a little on the purchase side. Doesn't necessarily help on the refinance side.
Yeah. So that's the thing. The lenders can only order an appraisal once you have executed contracts, correct? Not as an accepted offer, or
Well, here I'll
each
give you
one
an
is different.
Yeah, each one is different,
Okay.
and they are different. So within our system, if we have an offer to purchase, we can order an appraisal off an offer to purchase. We don't need a fully executed contract.
Oh, okay.
So here in Greenwich, as an example, that fully executed contract can take 2 or 3 weeks to actually execute.
Yes.
So if you're just dealing with a lender that will only do it with a fully executed contract, and
That will delay.
that will delay your process.
Yes.
And you need to keep that in the back of your mind.
Yeah. Anyway.
But we will work from an offer.
Oh, okay,
an
that's
offer to
good.
purchase.
Well, I don't want to take. Oh my gosh, what time is it now? Okay, it's like a good half an hour we've been doing this. Well, if you think you learned something from this real estate chat with me and Sean for today, let us know. We would really appreciate it. What I'm going to do is, after this video, I am going to post these documents that he has. So if you know anyone that's thinking of buying a home,
Feel free to call.
feel free to call him. I will put his number and email on the either on the comment or somewhere in the post today. And if you know anyone, or if you have any questions about real estate, there is no such thing as a trivial question.
No.
Every question, you'll be surprised, 100 other people have the same question.
Oh, sure.
Oh, I forgot. So let's say they're working with you, and then I know you did say, like, well, that rate doesn't apply to you. If someone is, let's say, offering them an 1/8% or a quarter, well, an 1/8%, believe it or not, on a mortgage can make a big difference. Will you, knowing you,
Well, yeah.
you do check whether to see whether you could match the rate or not.
Oh yeah, if it's called a price exception or a PE. So an example would be, let's say you're in competition with someone else and you're within a reasonable range. I can go to the regional guy and I could get some better pricing.
Oh, last question before I forget. This was the other question: to whether or not to lock in an interest rate, especially when do you do it? If you think interest rates are going up, yes, lock in the rate. If not, you don't. There's a 60-day lock, 90 days lock.
Well, there's 30, 45, 60, 75, 90. The longer you go out, the higher the interest rate. So what you want to do is you want to be very confident that you can actually execute and close within the timeline of the lock. Because if you roll over that timeline,
There's penalty.
there's fees involved.
Yeah.
So sometimes you can get them waived. In the big refinance boom that we had last year, underwriting took a very long time.
Oh my God,
It was
yes.
a total separation between a purchase process and a refinance.
Is the
process.
refi right now not as crazy as last year?
It's not as crazy, but it's
It still is.
What did someone say in a meeting the other day? It's like, there's 14 million people that haven't even looked at their mortgages that are capable of refinancing now. Rates are still incredibly cheap. I mean, there's been a fluctuation, I think, in the last 3 or 4 months of about 1/8 of a point.
Has it quieted down on your side right now because
Well,
of the
it's-
holidays?
It's a holiday thing, and it's a Connecticut thing. It's
Everyone's like
it-
Hanukkah, Christmas.
It slows down a little bit. But it's still, the pipeline is there. The biggest thing is people in our industry were so busy the last year and a half
Yeah.
that a lot of people didn't take their vacations. So
Yeah, well, no one-
so they were
some of
very,
them
they were
can't
very,
either,
but
yeah.
a lot of employers won't extend vacations. You use it or lose it. So around this time,
Everyone needs it.
there's less people in the back office
Actually,
because
my
they're
sister
taking
wanted
time
to,
off.
Yeah.
So what you want to do is you want to understand how a mortgage person will perform. Can they perform? Are they incredibly straightforward with you? A good mortgage person always is. You never want to run away from a problem. You want to address it.
Yeah, well, that's the thing. For me, before I list the property, I would already think, because I represent a lot of buyers. I
Right.
was a buyer for like 5 years before we finally bought a house.
Right.
And the thing is that, when you're putting a listing on the market, or if you're getting a mortgage, you basically, maybe it's a job of an agent, but what I do is like before I put a house on the market,
Mm-hmm.
I'm looking at it as the point of view of the buyer.
Oh, sure.
And it's like, okay, if I'm a buyer, this would be a problem, this would be a problem, that would definitely be a problem.
Sure.
Then instead of, so we figure out a solution, even or we have an
Yeah.
answer before they get asked.
Yeah. Yeah.
So,
If there's employment issues, you want to anticipate what they are. If you're transitioning from being self-employed to being an employee, there are issues involved in that, and the other way around as well.
yeah.
So, you as a mortgage person, you just need to understand the full picture. If you have the
Yes.
full picture, you usually can find a solution.
I believe in there's no such thing as problems, only solutions.
Yeah, no,
And you have to know how to think outside the box.
Yeah, you just got to work through the process.
Yes. And for you to be able to do that, you really need to know the process for you
Yeah.
to be able to figure out the solution. Just a disclaimer, I just want to bring this up because I have a feeling they're going to say, well, Sean said if it's only 50,000 more, it's going to cost me only.
Call me, I can do that.
Yeah, call him
specifically.
before you do anything. Well, Sean said we could do that. Well, not only that, certain buyers basically say when their maximum outgoing, that includes taxes, mortgage, insurance, is let's say $5,000 a month. So for some people, that extra $100 may break the bank.
It can be, but
So-
be specific.
Yes,
Yeah.
that's why when they
Be very well. One thing, and it's amazing how many times I explain this to particularly first-time home buyers. When you think in terms of what you can afford on a monthly basis for a mortgage purchases, you want to take your income before taxes, divide it by 12, multiply it times 45%, and whatever.
I'm gonna make him to write that down. Don't worry, because I am gonna forget.
But you take your
Yeah,
gross amount,
yeah.
divide it by 12, multiply it times 45%,
Yeah.
and then start subtracting all your debt. Your car payment, student loans, whatever's left over is what could go into your pity payment, principal, interest, taxes, and insurance. Your total monthly
Pity payment.
Yeah, principal, interest, taxes, and insurance. So that is what you can afford on a
Yeah.
monthly basis, 45 and under.
I always say though, if let's
That's
say,
gross.
if that number is let's say 5,000, if it's just me, I would go 4,500 just in case.
Yeah.
Because you'll never know. You get sick, you need surgery, and then like
Yeah.
okay, you need to have an emergency fund too.
And we take that into consideration. So
Yeah,
that analysis is always part of the analysis when you're giving people money.
yeah.
Yeah.
Well, guys, it's been over half an hour. Thank you so much for joining. This is our first episode of Real Estate Chat with Jennifer Hall. We're going to have another one next Wednesday. The guest that I have, her name is Deering Rose. She is actually an organizer. Actually, she changed the name of the company, Chaos to Calm something, because it's fairly new. Because that's another question I asked. Oh my God, I want to sell my house, but my house has 20
Yeah.
years of like stuff, and I need to declutter. Don't know what to do, or I'm gonna put my house on the market. I need a stager. So we're gonna have. That's my guest. She's gonna be my guest next Wednesday. And if you have questions for her, DM me immediately so I could ask her beforehand. But she's the guest. And then 2 weeks from now, we're gonna have another lender, Need Capitals. Actually, do you do commercial?
I do not do commercial.
Okay, so because I do commercial too, so Need Capital does commercial property lending. So if you have any questions, feel free to reach out to me. My name is Jennifer Hall. Yes, I am a real estate agent. The reason I say that, because I do a lot of posts supporting local businesses.
Right.
they was like, oh, I didn't know you were an agent.
Yeah.
Yes, I'm a realtor. I'm an agent for 18 years. I love my job. And this is just one of the, I thought, I've been asked actually a couple of times, like, hey, you do a lot of videos, you do a lot of blogs.
Right.
Can you do this more regular?
Yeah.
And in that way, because you answer a lot of our questions. So I thought it's like, it's scary, just want to let you know. But
If anything comes up, I'll be happy to come back. So.
there, no, you will come back.
Okay.
You know what I mean? There's so many things to talk about
Yeah,
in a mortgage.
Yeah, there's a lot.
And I'm sure after this, people who are watching, you know, please feel free to share it to anyone. They may have follow-up questions.
No.
So like a physician's loan, they have to be working already in a year, 2 years, or just started a job, or how does that work?
They'll be in contract. If they're in contract, then you can work it out.
So if they don't have a pay stub yet, because they're just about to start, they'll just show
They
you a
can still,
contract?
the contract will work.
Okay. So thank you guys. Sean, thank you for coming.
Thanks for having me.
Enjoy your day. Sad it's a cloudy day, but still, you know, I'm always grateful every time I get up in the morning.
Beats the alternative.
Yes. Anyway, thank you for joining. Stay well, be healthy. Thank you for joining. Okay, I'm going to do Facebook closing and then this one.